Good morning, it's Jonathan Barrett with the morning brief. It's a little bit late this morning, but it's Wednesday the 3rd of March. Quite a good night last night for US equities. It has been quite interesting to see the volatility we got in that market as people sort of weigh between economic stimulus packages taking hold, positive economic outlook, and they grapple with the higher price of oil and the effects that will have on the economy. So expect the volatility to continue, but as we go into the day, it's good to see that oil is relatively stable, and I think that's providing a little bit of a buy signal for people into the equity market. Okay, let's just have a little bit of a quick summary of what's happened over in America. Dow was up 124, 12,214. The S&P was up 11 at 1321. The Nasdaq was up 20 at 2765. In Europe, the top 50 was up 14. The FTSE was up 0.98, and the CAC was up 25. The DAX up 2. Local market actually had a good night. It was up 9 points to 4,815. I think a lot of people did expect it to be a little bit stronger, but if you remember yesterday, we had quite a solid night when we were actually expecting the market to be lower. But we held on to that very tough support around that 47.50 level. And that, in my mind, is a real key area for us now. 47.50 needs to hold, and that's the range on the downside. That's the support on the downside to keep a focus on. Okay, let's have a look at just a few of the things. We'll start off with the dollar index. And as you can see, dollar index had a good bounce. Actually, like dollars at the moment, any dip back to that 76.20, I think, can be looked at as a good opportunity. That is on the dollar index. You can see also, if we look at the daily chart in the dollar index, that we've found that double bounce. Now, this is interesting. It'll be interesting to see how we're flagged it at this level, but to see what economic consequences will provide support for that US dollar and how far that US dollar will trade from here. Technically, you have a low-risk entry opportunity in buying dollars, and you can see that. We'll just have a look at some of the currencies here, particularly look at the Aussie, which I think is in quite a very interesting situation. There you go there with the Aussie. Just try and bring it down a bit, and you can see that it's working its way into this pennant. Traditionally, these pennants have a break to the top side, but this time let's really see what happens, because if the buy dollar scenario was there, it should eventually fall out. Don't be surprised if we see it trade higher, then fail, and then come back down. And once we see that, if we see a break above that trend line there and then it fails, then that'll give you a signal to buy the US dollar. But having a look at the US dollar against some of the other currencies, particularly the dollar yen, as we know, we have been long dollar yen for quite some time, 82.60. That's what it looks like. Traditionally, that type of movement gives us another look that we're going to go higher. Momentum indicators are with us, so if you want to buy dollars against the yen, I think it's quite an appropriate time to actually do that. In particular, that we have got quite a good risk profile in terms of where you can put your stop. So have a look at that. I think it's quite positive. Okay, so that's the dollars, general dollars, and if you look at the euro as well, which is probably not a bad thing to actually have a quick look at, because we are seeing a bit of a trend there by Trichet actually wanting to put interest rates higher. Now, that will be quite an interesting thing also in the UK. Let's see how the market interprets that. But you might see an interpretation that we still are not economically strong enough to afford interest rates to move higher, and therefore it could be a negative effect on the currencies. So it goes against traditional thinking, but that's something which we can look at. Okay, so that's that. Let's have a look at crude. And I think crude in itself, very volatile, expected to be volatile. There it is. We heard some rumours last night that Gaddafi was going to step down if we met some conditions. The conditions obviously in itself would obviously suggest that he doesn't get prosecuted, that he saves his billions and billions of dollars, and everything's good. Now, I don't think the West will budge on that. So one would have to expect this concern to remain very, very volatile. As such, you can't signal a sell for crude. If anything, you still have to have a bias, which would be long. Technically, it looks as if that's the case, but in trading it, I would suggest it is a very hard thing to trade. You can trade it from the long side and a test back to those old highs. If it stays above 106, 107, then 110 certainly is on the cards. Any movement between 110 and 120 I feel is a concern, because that will have the impact of slowing growth. And I think with these economies which are still looking at austerity programs and stimulus packages, then I think it does become just a bit of an issue. Okay, so that's crude. Also, as you probably appreciate, gold, obviously waiting to see what happens in the Middle East. There it is there, 14.28. It looks like momentum has slowed down for the trend higher. Expect it to test the top side to make sure there is a high or low. You can be guided by a break through that 14.20 as well, if in fact you felt you wanted to move your stop losses higher. So that's not a bad thing to do, but the trend is still with us, and these sorts of momentum, these sorts of technical indicators suggest that gold, because it's held onto this 14.20 level, that we could actually see it edge higher. But once again, it's all based on what really happens in North Africa. Okay, so that's that. Let's have a quick look at our local market, and have a quick look at our local market and see what we can do. AP, little C1. Oops, APC1. Sorry about that. That's what I want. Local market, you can see that it's had a good rally. And I think the market will extend those gains today. There you can see it now. And look, that looks okay. If you are short, take it out at about 14.30, because that will confirm the top, remove to the top side, and also confirm the range. So I think more sideways, maybe 48.50 seems to be on the cards. Let's see what happens through that level. In terms of economic numbers this week, so today we've got some data out of the UK, NAB business conditions in Australia and confidence in Australia. We've got data, unemployment, let's just check that. That's Tuesday, no, I want to go to the next one, didn't sound right. That's better. We've got housing loans in Australia, owner-occupied home loan values as well, CPI in Switzerland, some trade balance out of the UK. RBA Stevens has got a speech in London, but more importantly, we've got IP in Germany and new housing prices in Canada. Not a lot in the States, wholesale inventories and MBA mortgage applications, so that's about it from that front. So I guess if anything there, let's just sit with what happens, and I think that obviously the Gulf will be the key for the direction of a lot of these markets. So let's keep an eye on it. Keep an eye on copper as well, because if we see the Gulf region starting to get greater social unrest, then the chances are that people will take that out in the equity markets and also some of the other primary inputs such as copper. Anyway, that's about it from me. Hope you all have a good day, and we'll talk to you tomorrow. Bye for now.